Digital public infrastructure fostering innovation and shaping tomorrow. As you are all aware, India, I think now it is ranked number 3 in terms of digital adoption in the world. In terms of number of digital transactions, we have the UPI. I think India is number 1, maybe you will be able to confirm. We get the statistics every month about transactions of UPI, ATM transactions, etc., etc. So to speak about that, as I said, SBI is the leader in terms of IT expenditure, IT adoption, and the latest technologies in banking. To speak about that, we have Mr. Rajiv Ranjan Prasad. He is the Chief General Manager of a DB transformation at SBI. And he has joined the bank in the year 1992. And he has grown through working in various functions. And these opportunities have been as varied as he has worked in trade finance, both in India and abroad, and information technology, retail banking, branch operations, personnel and HR, and correspondent banking relations in financial institutions group of corporate office. So we are happy to invite him to deliver the speech for this session. It will be followed by a group discussion, panel discussion, Yeah, you can. Can one of you help him?
Good morning. So at the outset, I thank the organizations of InCube, this event, for having invited me and given me this opportunity to come here and speak to you and also learn from you the various facets of digital banking, how the things are evolving around the world, particularly in India, and also to share with you my experiences last 3 years, which I've been at the helm of handling this digital banking and transformation team at State Bank of India. So let me first start this. Basically, if we look at India, how things have evolved, and also how it gels with the aspirations of the country, aspirations of 1.4 billion people. That already we know that the milestone, a benchmark or milestone has been set for ourselves to achieve to 2047, Viksit Bharat. So towards that direction, if we see actually, and we are already at now 5th largest economy in the world, to be at that place by 2047, where we become the 3rd largest economy in the world, it's a humongous task. It's every stakeholder in the economy, in the country, will have to fire their own cylinders. Their full cylinders have to be fired. And also the basic enablers which have been created over the years, and also how these enablers actually evolve and then align, and also they create the capability for the country to actually ensure that it actually achieves that particular milestone of Viksit Bharat by 2047. It's necessary that the DPIs become a very key driver of that particular journey. India, as it is in last, I would say, 1 decade, has already established itself in the digital global superpowers, I would rather say. If you look at how the things have evolved, particularly with the DPI, and how India has actually made use of, very fantastic use of the DPI, we will see that the tech leverage that few countries used to enjoy before DPIs came into being, and the way India used the DPI rails and infra to actually take a leap, actually leapfrog into the digital global superpower. So we will see that this use of open source platforms has actually resulted into that, and actually helped India get into the, establish itself into the global superpower club, rather I would say. So Indian DPI, it's basically, it's established on three key fundamental pillars. It's the open source API, we are all familiar about it. It's interoperability, and also that it's a fact that it's a consent based. It has to be consent based. So these three fundamental, key pillars on which the DPI has been built into the country. And also the another two principles is that on which DPIs again have been built is the minimum collection of data. And the data has to be federated, so that there is no honeypot anywhere which can be exposed to any kind of a risk. So around this, we have actually India successfully built the DPI. And if you look at the success stories in terms of economic value, apart from whatever in terms of process efficiency, in terms of transparency, in terms of governance, in terms of convenience and ecological benefits, apart from that, if we look at the tangible benefit of it, by 2022, DPIs have already contributed, they were contributing 0.9% of the GDP. And the way things are moving, the things are evolving, it is expected that by 2030, they would actually be contributing 3x of this. And what we are talking about is only the contribution coming from the mature DPIs. We have not even, actually there are budding categories of DPIs, there are nascent category of DPIs which are still evolving. But looking at only the mature, from the contribution coming from the mature DPIs, it is expected to contribute almost 2.8-2.9% of the GDP by 2030. So the huge potential, now what kind of potential actually this has unleashed over a period of time. Such story of digital transaction, everybody is aware. Now India is the largest country, the total global 46% of the digital transaction is actually contributed by India. And if we add payments to it, UPI success story everybody is aware of. Almost this is growing by 40% on a CAGR every year. The UPI payment, digital payments is growing by 40% CAGR. And actually if you look at the total addressable market, only 23% of the TAM we have actually covered when it comes to payment. Just think of it. We are the biggest country, the country which contributes 46% to the digital transactions. Payments is growing by 40% CAGR, and still the total addressable market coverage is only 23% right now. Similarly, if you look at lending side, on the lending side, DPIs, it's again the revolution that we are seeing in terms of the fintech evolution, the startup evolution. That contribution is again coming largely from the capability which has been created around DPIs. More than 52% of the unsecured loan in the country is getting financed by the fintechs and the NBFCs. And it's totally built on the DPIs, the capabilities created around the DPI rail. If you look at account aggregator. In account aggregator, right now almost 550 FIUs are there, around 200 FIPs are there. 10 million lending use cases have been actually created or have been used primarily through the account aggregator network. Similarly, on the PFM side, the wealth management advisories, investment advisory, 15 million use cases have been actually created. Similarly, if we look at the e-commerce, ONDC, just a budding DPI, I would say. And against 48% of Amazon and 35% of Flipkart, ONDC is already contributing now 4%. And if you have seen today's newspaper, actually one big segment, which is the restaurants, their association is saying that we will actually prefer to move to ONDC now, away from Zomatos of the world maybe. So another big opportunity built on what kind of potential this DPI is actually unleashing. We can see payments, we saw lending, Lending on the retail side we saw. Again on the MSME, on the another capability, the GSTN, where the TAM is already 100%. 100% coverage is there in the GSTN. FASTag, 3.85 billion transactions last year, 23-24, and covering 97% of the TAM. And if you actually look at the GSTN, FASTag together and the UPI together, you are actually already creating a physical, kind of a physical market, which running on DPI. Again, lot of use cases can be created, are being created right now already. Similarly, if I talk about the ONDC, I mentioned about the 4%, but apart from the financial sector DPIs, we also have many other DPIs, Ayushman Bharat, which is covering 29%, DigiLocker 12% TAM is already covered. If you look at National Digital Education Architecture, 33% there. So these are the budding DPIs. Nascent, we have Bhashini, which has the potential to actually unleash the last mile connectivity. Because right now it's still largely focused on the English, on the main language, English, Hindi maybe. But if you really want to actually get to the last mile and actually touch the lives of the, I would say, bottom of the pyramid, where a lot of theories are also there, actually the money is there, the cream is there in the bottom of the pyramid. Bhashini makes it possible. GEM is another DPI which is there. So various, any facet of the activity, whether it's lifestyle activity, lifelong activity, customer life cycle value, if you look at it, if you look at the financial aspect of it, everywhere DPI has a significant role to play. And I'm sure the capability which has been created or which are being created right now, and where the further possibilities are there, they are certainly going to help and actually help the country in achieving the goal. Startup ecosystem, where we boast of already getting the designation of the third largest startup, having the third largest startup ecosystem in the world, that has again been made possible either by the DPIs. Because the entire innovation is happening through the startup, through the fintechs, relying on running the solutions on the back of the DPIs. And there's a estimate that already startups have contributed already $500 billion to the in terms of value addition. So what we see that all this revolution, whatever is happening in terms of the DPIs and the solutions which are being created on the top of the DPIs, we will see that, okay, this total addressable market, actually it is getting expanded in two manners. One is that the trickle down effect that we have been, if we 70s, 80s, the theory was built actually around the trickle down effect, and accordingly the planning was done. But the DPI has made this possible that apart from the trickle down effect, we are actually raising the floor by making this accessibility available to the last the person who is actually sitting at the bottom of the pyramid, and actually bringing him up so that he can actually get connected to any of the DPIs and avail the services in a direct manner, in a transparent manner, in an efficient manner. Now that is one. Another key change that we will see, and where the opportunity is coming along, is the demographic change which is happening in the country. Between 2020 and the way the projection is there up to 2030, if you look at the high income household incomes, there is a diamond formation actually which is happening. From the strugglers to the to the next billion, to the aspirers, and the affluent to the elites. Actually, the strugglers, there is projected to be a decline of minus almost 5%, whereas the next billion is likely to grow by 1%. Aspirer is likely to grow by 5%, and affluent by 9% actually. And on the top of the pyramid, if we see the elite, they are likely to grow by 10%. So whereas ultimately look at the opportunity that is getting created out of it by 2030. Today the contribution, actually only 50% of the Indian population is contributing to the Indian GDP. Now look at another aspect, that between 2005-6 and 2020, the proportion, the percentage of early marriage in the female, it has gone down from 47% to 23%. The percentage incidence of, again during the same period, for the first pregnancy, it has gone down from 16% to 7% now, up to when I say early pregnancy, 19 years of age. So now there is going to be significant, or there is already happening, actually the ball is already churning, that significant contribution from the female section, from that category, is going to contribute heavily to the GDP. They are becoming in a very fast manner, they are becoming part of the economic activity and contributing to the GDP. If you look at the lendable population again, if I exclude people above 65 years of age, below 20 years of age, also the rural and the urban poor, in terms of score, 650 and below score, if I remove them, that still leaves me with a lendable population of almost 35 crores. So look at how I would say the total addressable the population, that category itself is expanding in a big way, and no solution can be created which would be actually able to handle this at a scale. So coming to this was all about the retail side. On the MSME side, there is a credit gap of 60%. And if I look at the supply chain finance, and actually that is the kind of MSME activity which remains totally underfinanced. Total balance, total advances outstanding of all the scheduled commercial bank, only 5% is actually contributed by the supply chain finance. Now look at the opportunity in terms of invoice financing, in terms of cash flow based financing, in terms of deep tier financing, and nothing of these requirements can be met unless there is a perfect symphony between the different kind of DPIs, and actually the solution provider is making use of these DPI capabilities, be it account aggregator, be it your GSTN, be it FASTag. So if we have to actually serve this MSME totally underserved segment, this category, actually what is happening, that lot of solutions are being created, because now a lot of high quality, high frequency, reliable data, third party data is now available into the market thanks to DPIs, on which the solutions are being built already. So if you look at again MSME alone, if we see the kind of contribution that can come in terms of reduction of the TAT, almost by 50% the usage of DPI can reduce the TAT. So if we look at the DPG in the startups, basically they are already solving for, and they can further scale up the solutions, which is actually taking care of three fundamental issues with regard to MSME financing. Is the discovery of the right borrowers. So actually the capabilities are helping me in terms of Aadhaar, in terms of PAN verification, as I said, GSTN, and also access to all the kind of structured and unstructured data. Discoverability of the customer has become very easy, and that is one critical cost that any financial institution has to incur. If you look at the entire customer life cycle, that is the costliest piece of the life cycle. Sourcing, identifying and sourcing, discovering the right customer to finance. Another is access to this data, is also reliability of the third party data, which has quality has tremendously improved. That the financing institutions can actually make use of this reliable third party data to price the risk which they are actually, with which they would be actually financing. And having identified the customer, having financed them, the third part of the cycle comes in terms of collection capability. And that has to be very robust because if we are going into small small ticket financing, the collection capability, automated collection capability has to be very strong, very robust. And again, there are various kind of solutions which are there created on the DPIs which are available to us now. Actually, we are already looking at, within the bank also we are looking at various solutions around collection, creating that collection capabilities, and they are fantastic solutions, let me tell you. So if we actually see these opportunities, the kind of capabilities that are that have already been created, the question is, what do we do? Where do we go from here? The real challenge, DPI is established, mature DPIs, as I said, budding DPI, they are catching up fast. Nascent DPIs are also in the process of moving towards budding and then to the matured. Solutions are being created, but what do we do more from, where do we move now? The key challenge that we need to actually address, the DPIs will have to address, the government, all the stakeholders will have to address, is in terms of the security, the governance, interoperability. They will have to see whether actually that solution is actually is being created for the population at scale or not. We can't create a solution which doesn't work for the which is not able to meet the scaling up requirement. Whether you go to NBFCs, whether you come to any scheduled commercial bank, everybody is looking for a solution which can be scaled up fast. For that, the DPIs also have to actually look at solutions which are based on the cloud. Another is that the right now, this is our practical experience also, what we have seen as part of the various DPIs that we have been making use of, that there is a kind of information asymmetry between the citizens and the service providers. The consent is not an informed consent in all cases. I am not painting everybody with the same brush, but this remains a truth. This remains a fact, that there is an information asymmetry, and many a times the consent which is being taken for making use of the for getting access to the customer data is not a informed consent. One challenge is maybe emanating out of the language barrier, where I said Bhashini or maybe some other DPIs can be put to good use. But even in terms of the designing, how the UI UX is getting designed. So I think the contribution, I would say the focus of the startups, of the solution providers, of the fintech also has to cater to this requirement, particularly given the background of the DPDP Act now. Another thing is that naturally, as corollary of this is that cyber security audits, continuous monitoring, all things things need to be happening in a regular manner, and basically DPIs have been built on the public and the private partnership, and going forward also it has to remain like that, because the funding will come from the public, but the solution has to come from the solution, and that actually key unlock of the opportunity has to happen through the efforts and the innovation being carried out by the fintechs and the startups. But another key challenge which I think everybody needs to look at is the capacity building and the skill and the training. There is a huge gap. There is a huge gap when it comes to training, the skill, availability of skill. That is one fundamental, I think, gap. If it is not addressed quickly and urgently, that may actually create some kind of friction at a later point. Not sooner, quite soon, I would say. So India is actually scripting a different model of growth. It's a scripting a journey of growth which is built on collaboration, which is equitable, and which also democratizes opportunities at scale. And if you actually look at it, this has created a situation today where customers are well within their rights to ask whether they want only banking services or they want a bank. Customer of today, maybe a customer of tomorrow, they may not require the bank. And if a banker thinks that, okay, by hosting that particular customer account, they have the full authority and the ownership and monopoly of the customer, those days are gone. UPI has shown us the path. He or she may be hosting and holding account with any bank, but maybe using some other fintech big tip app application. He may be holding account with any bank or NBFC or maybe any bank, but he may be seeking or availing a lending facility, an insurance facility, mutual fund facility from any fintech service provider. So the message for the fintech and the startups would be, just to conclude, is that create your systems, solutions which are first of all at scale, built at scale. That is one. Secondly, they cater to the security requirements. They are able to foresee the security requirements. They are very robust, adhere to the DPDP in the, I would say, not only in spirit but in letter and spirit both. And for the banks, that unless, and we are actually getting attuned to it, and we are alive to the situation which is emerging out of the DPI capabilities. So we have to be alive to it and accept it, and actually ensure that the solution, the services actually reach to the every person, every citizen of the country. Thank you. That's all. Any questions or anything?
No, we will have a panel. That time we will ask them.
So I'm also on the panel?
Yeah.
Okay.
We would like to thank Mr. Rajiv Ranjan sir for an excellent speech. Speech was full of statistics, which I don't know how he is able to remember so many numbers, followed by what are the strategies to be adopted to address various segments of borrowers. So thank you, sir, for giving this speech. Sir, center.
Thank you.
Yeah, please have a seat. You also. Yeah.